Hey, what's going on, guys? Just wanted to give you guys an update on Bitcoin from yesterday's video. Uh, I haven't changed anything on my main chart here, except for this triangle, but I'll explain why in a minute. But other than that, I haven't changed anything. I cleaned a couple of things up, but um, I believe we're 1, 2, 3, 4. I believe we're headed down into this fifth wave here at some point to complete the C of the big B up for the C. Um, and I just want to also explain a lot of people, a lot of people love Elliott wave theory, and it can be extremely useful and accurate. Um, and as long as it's utilized correctly, the nice thing about it is it gives very clear and concise targets of your count. Um, of your, as long as as long as you follow the rules and you take into account that there's always at least two scenarios going on, usually more than that, especially with Bitcoin. Um, you know, uh, but it can offer extreme precision as far as entry and exit, stop loss, profit, whatever. But the nice thing about Elliott wave theory is you know immediately if your count is wrong. You know if you're wrong. And if you're wrong, you get out of your trade and you reevaluate things, etc. But a lot of people also say Elliott wave is bullshit and it's crystal ball and blah 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 blah, which in a way, I can somewhat agree with that. It is usually um, forecasting. I don't want to say predicting because that's really not what technical analysis is about. It's not about predicting the future. It's about laying out the roadmap and the most probable scenario within, a realm of infinite possibilities. So, there's never, it's not predicting the future. So if you just, if you're a layman and you just look at this chart, you're like, oh God, look at this. We're going here, we're going there. This is very predictive. No, that's not what's going on here. What's going on here is I have a count, and as long as this count follows this rule set and continues along the road, the path that it's on, the probability of it fulfilling its targets are very good. And when you're trading, that's another thing about trading is, forgive me, guys, if I know a lot of you guys know all this stuff, but I'm trying to also appeal to, people that may not know this stuff. And there's a ton of misconceptions about trading. There's a ton of misconceptions, especially within the crypto community. I've never experienced so many people that have literally no respect for technical analysis. It's garbage, it's nonsense, the whales, the news, the blah 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 blah, whatever. Which is fine. That everyone's entitled to their opinion. You do with your money what you do with that. Could care less. But just from my standpoint, basically there's always a realm of different possibilities, and that's all we are trying to do is cut down the amount of possibilities and narrow in and focus into where are the percentages and what's most probable. And that's kind of brings me to my next point, which is to be a successful trader and to be a profitable trader and to be the kind of trader that lasts over years. You don't have to be right more than 51% of the time. In fact, you can be wrong 51% of the time and correct 49% of the time. It just boils down to money management, and just laser beam focus, and you know, making more on your wins than losing on your losses. But you know, that this is kind of common sense stuff. But you know, sometimes common sense stuff evades us. You know, it's just human nature. But anyways, I just want to acknowledge that Elliott wave theory by itself is, you know, it's as useful as anything else is in technical analysis. It's as useful as looking at, you know, one indicator without taking into account, you know, all the other indicators, the whole, you know, story. We're kind of like the people in this community that do this. You know, there's a ton of people, and I have a lot of respect and love for anyone who does technical analysis and does this kind of stuff. You know, whether I agree with what you're saying or I disagree with what you're saying, it really doesn't matter. But you know, so basically that's kind of the point I'm trying to get at here is, you know, it's just probabilities. That's really all it is. And Elliott wave theory, although I utilize it a lot, it's not the end all. You know, there's so many different effective indicators and you know, tools, and you know, people have been trading for, geez, you know, forever. So there's all kinds of stuff. But I like Elliott wave theory. I'm very successful with it. You know, some people aren't, some people are. You know, but anyways, this is what I have here. I have us coming down at some point here. You see that we cannot hold this 200-hour moving average, this 200 moving average. We can't hold it. We broke it. We've just been kind of chopping around through it, and we just keep rejecting it. We can't sustain any power to get above it and stay above it. So you can see it's kind of coming in now like a storm into the price. So just from an Elliott standpoint, I have us coming up for you know, we're in a very subwave here. I believe we're done with the 3. We're going up for the 4, and we're coming down for the 5. In fact, this little 4 here might be complete. So I expect to move to the downside in the you know, in the future. Not a big move to the downside, but we'll see. As you could see yesterday when I made the video, we had just wicked onto my first target. A few hours later, we came down further into it. We just didn't want to touch this this support here. So, you know, this is my first target to go long, second, third. You know, pretty obvious here. I have this triangle drawn. This does not make sense from an Elliott standpoint. The triangle, it does not work. This is just a basically what I was going over on the last video with descending triangles. I do not believe this to be a descending triangle, although it very well could be. But there's several reasons why I don't think this is a descending triangle. The main one being is I don't like this move here up. This is, I know that, you know, we're still in a bearish market, but this move was up. So I don't necessarily like that. You know, if you wanted to bring the triangle down here and we had some type of you know, triangle action, hold on a second here. If we had some kind of action like this, where, you know, obviously this is not completed because we haven't come back down here, then I'd be more apt to look at the possibility of a triangle. But that's basically what I have at this point. I'm just waiting. You know, I'm looking to go long here. I've done a few little scalp trades up here. Made a couple of points, but you know, it's just kind of messing around, nothing major. But I want to go over today. I'd like to go over the kind of the macro analysis of Bitcoin, and I'm not going to do an Elliott wave count, although I do have one. but I'm not going to go through that right now. I want to go through kind of basics here on support and resistance. And I'm going to go to the 1-day chart here, which these are trend lines. Real quick, again, apologize. Most of you guys know this stuff, but real quick, support and resistance. It's just basically what it sounds like. You know, you have, we'll go from here. You have supports that are ascending supports, and basically they will hold the price up and basically trigger a bull rally. Once you establish a base, then you can push off of it and start moving forward before you retrace and retest the support. And this is really the most basic, simplest form of technical analysis you can use. This is, you know, a lot of retail traders are not laughed at, but, you know, kind of criticized for using this type of analysis. I think that is completely inaccurate. I happen to know a few people that only use this to trade, and they keep their trading simple, which is a great idea. Who doesn't want to keep trading simple? And they're very, very skilled with it. And the reason being is because they're like I was saying, forensics. They're like going through the charts like detectives, and they're not just drawing random trend lines. They're looking for high volume pivots, big pivots in the market where the market changed directions. You know, it's a real art form, and it's a real skill. One of the guys that is extremely talented with this is a guy named Josh, who he runs his own group. I have a lot of respect for him. This is the kind of analysis that he uses, and he's a fantastic trader. So, you know, to put one form of technical analysis down, it just doesn't make sense. Most times, when even in life, when you're putting something down, it's because you don't understand it. You know, really, that is the truth. So, but anyway, I want to get into this. This is the Mt. Gox crash from 2013, 2014. I've seen a lot of YouTube videos, and I do keep track of other people, you know, famous people or people that have a lot of respect for, that do this kind of stuff. And, you know, I watch some of their videos, and one of the things I'm seeing is everyone is looking at this as a fractal to this here where we are now. It's a good possibility. There are many, many similarities, but in my opinion, and I'm not saying I'm wrong or I'm right, but in my opinion, to look at this chart and say we are here, that is a big mistake, because this is a typical bubble cycle. You're seeing it here. You saw it here. No two bubbles are the same. No two market cycles are ever the same. Now, they're going to share many similarities, many of the same characteristics, and there are certain things that you want to look for and expect to see when you're looking for reversal out of this bear trend. Out of this bear trend, you're always going to see fundamental similarities there, because that's just the way things work. It's the way markets work. There are certain ingredients needed for a market to reverse, and you know that's just the law of nature. So of course they're going to be similar, but to say we are here, we are here, we are here, I mean, you're just setting yourself up for failure, and I just don't see it as the right way to look at things. You want to look at things with fresh eyes. You know, there is I don't agree with that at all. But anyway, this also brings me to my next point of the art form and really detective work when it comes to drawing these trend lines. And this is, if you're just starting out, this is where you want to start out. You want to start out drawing trend lines. And but basically this here, Bitstamp, I use Bitstamp because it's one of the oldest exchanges. I could use Bitfinex. I hate Bitfinex. I hate Tether. I hate that whole thing, but whatever. But I've gotten many cryptocurrency people that say, well, what form of technical analysis predicted the run to $20,000? And in 2011 of November, we had a dump and we found support here. And we stayed relatively above this trend line, this ascending support here. We broke up, we retraced, tested, broke up, tested, up, tested, up, tested, bam. And this support here is extremely important. And the reason I say that is it was tested many, many times. It held up, which in other words, people believe that this is fair market value for the commodity, in this case, Bitcoin, at these prices. And you can see as this line is moving up, people's idea of what fair market value is also moving up with the trend line. And that's why they're buying these dips down here. They won't let it drop below this trend line. And eventually what happens is people are no longer going to sell anymore because they see this trend line, other traders, whatever. So basically you have this explosion up here. And this is, in my opinion, off of this support, off of this base here. And just to go further about the $20,000 mark, before we even get into that, let's look at this Mt. Gox crash, this dump here. As soon as we broke this trend line, which we established here to trigger the bull run, all we were really doing was coming back down and retracing to test this trend line. And once we broke this trend line, this support here, which is basically the price can no longer sustain this upward slope, this upward movement. And going back to that idea is people no longer at this point are like, okay, fair market value needs to come back to reality. This support is no longer going to hold. It's too parabolic, et cetera, whatever. So we drop, we retest that support as resistance. We wick through it. We reject it on massive volume. Look at the volume on which we rejected this support, which is now resistance. This here is forensics. This is important. This is very important because this shows you the value and the substance of this support here. Now, let's go over to our all-time high at $20,000. Now, mind you, I drew this support down here without looking at any other part of this screen. So let's look at the $20,000 all-time high. Why did we stop where we stopped? Boom. Look what we rejected again. This support from 2011. So 8 years later, this support here that we've broken, that has now become resistance, is still extremely valid. Um, I mean, that's not a coincidence. If you think this is a coincidence, I mean, go buy a lottery ticket. I mean, I don't know what else to tell you, but now, mind you, also because of the long time frame and the angle of this, I mean, we could drop this a little lower to kind of fit in here, but it really doesn't matter. You see, if you're a trader and you see this, ridiculous move to the upside, you know that this is coming. There is, you want to get out, because why would you hold up here when you know that this massive resistance is approaching? Especially when, if you look at the volume, I mean, look at that volume here compared to some of the other volume. That's one of the highest volume days Bitcoin ever had. So basically, this illustrates the reason I'm going through this is this illustrates the importance and the value of trend lines. Don't ever underestimate trend lines. I mean, this is not coincidence. And also, I'd like to show you guys one other example. And I don't share all of my charts with the public just because for obvious reasons. But this was Bitcoin's one of Bitcoin's first resistances. I don't know what this whole wick is about. I don't know, but I look at this as one of Bitcoin's first resistances. It rejected, it came down, and that's what actually established this support we were just talking about. But this was a resistance here, and once we broke out of this resistance, look at this move, and it's just off to the races here. So this is a very valid resistance, and anytime you break out of a resistance, you should reestablish it as a support. And resistances and supports can flip-flop, and the more times you chop through them, the less valid they are, the less significant they are. But just keeping this as simple as possible. And I'm trying to not make this video too long, but when you're dealing with this much content, I mean, you can't go through this in 3 minutes. So, but anyways, we have this resistance here, very important. As you see the explosion between this resistance and this support established, break out of this resistance, explosive, Jesus, from $20 to now only $1,100. So, do the math on that percentage. But okay, now, as this has been a resistance that we've broken, we are always going to come back down and retest it as support. And unfortunately, it did not hold. Well, fortunately, unfortunately, it doesn't really matter. But you can see we caught the first time, and we bounced, and we were rejected by the 50-day moving average, back down, bam, slam down. This is a big move. It doesn't look like much on this chart, but this is from $270 to $156 in 1 day. That is like a 40% drop in 1 day. So look at this volume. Look at this sell volume. This shows how extremely valid and important this support is. So let's keep that in mind. Now, this was a support, come down, retest, pierce through it. We cannot close the daily candle above it. And we reject, and we kind of just sideways meander for a little while. But let's keep this in mind here, and let's keep going further. And this is, oh, excuse me. This was this. Okay, yeah, that's right. I'm sorry. Excuse me. I got a little confused myself there. This was actually we're actually looking at this. So this support here, beautiful, even better. So this was resistance. We broke through it here, blasted off. We come back down to test it as support. We, we wick off of it, and it holds. It gives us a little sideways action. We break through it. We chop. We chop. We're trying to now reestablish it as a support, and it's acting as resistance. We can't get through it. We pierce it, come back down, pierce it, come back down, pierce, down, and finally we bust through this resistance. And in my opinion, again, this is just my opinion, this is what sparked the entire bull rally to $20,000. This move here, this breaking out of this horizontal $1,200 range, and a few days later we broke through this resistance. We broke out, we came back down, we almost touched it, but we didn't. But I mean, after this breakout here, this thing went parabolic to the next one, and that's basically what happens. You break out of one resistance, you come back down to test it, you're going to go back up and test the next one. That's just the logical way things, way things work. But in my opinion, this was the massive breakout here that triggered this. Along with this, this is also the all-time high of Mt. Gox, the Mt. Gox crash. This was the parabolic bull run before Mt. Gox. And this is an extremely significant horizontal support, which, as you can see, once we blasted through this, it was straight to 20,000. And this is why I look at this entire move was from $1,200 here to $20,000. And that's why you'll see there are a lot of analysts that are calling for a $1,000, $1,200 bottom. This is where they're getting this from. So, and it's extremely valid. It is extremely valid. One of the things about predicting a bottom, I always see a bottom as a process and not a destination. It's a process. It's a psychological process of all the money that's involved. And there's certain ingredients, certain things that need to happen. And, we don't know what price that's going to be at. That price, the price and the action of the investors and the money coming in, etc., they're not exactly related. Nobody is going to pick the bottom to the dollar or whatever. But this will give you a general idea as, hey, listen, this was the Mt. Gox all-time high. This is what we broke out of. This is where we blasted off to the new all-time highs. It's fair to say that this is a pretty damn valid support here, as long as some of the other ones I have drawn on this chart. But that's basically trend line analysis. I actually didn't want to spend that much time on this, but also there's just one other point I want to make. As you can see also here, that I was saying this was a very important resistance here. The first rejection, reject, breakout, bam. It's the same type of move as this. Reject, 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 breakout, parabolic. Same idea. Reject, reject, breakout, parabolic. Now, let's follow this trend line here. Now, we broke out of this. We came down, busted through it, chop, chop, chop. And let's follow this now to where this here, if you look at this, I would say we came down and touched it here. I mean, you're talking about a few degrees of an angle over an 8-year period. We rejected again here, blasted through, came back down, touched it, and look at this. Look at this support here. It's 8 years old. Look at the volume that this support caused on a breakdown. This, I mean, look at this. Once, look at test, hold, sideways, fake out, retest, done, straight down. This support here that was a support, which will now be a resistance, is extremely valid. Look at this. I mean, this is from $6,500 straight down to $3,150. That's more than 50% drop. So, you know, this is the value of trend lines, and it's the value of accurate trend lines. You know, what makes an accurate trend line? I tried to just kind of go through that with you guys, but honestly, it takes years of practice and forensic, I call it forensics, but forensic work, detective work, whatever you want to call it. But you know, what form of technical analysis predicted 20,000? This did here. And I drew this trend line without ever looking at this side of the chart. You know, so yes, technical analysis. It didn't predict 20,000, but it marked $20,000 as an enormous resistance. Let's just leave it at that. So, you know, that's basically it. That's all I have for this video. There are a couple of things I would like to go over. I spent a little too much time on this video, but you know, one of the things I did mention was a bubble cycle. Bubble cycles, it doesn't mean the commodity is a bubble and it's bursting and it's dead. That's not what that means. Bubble cycle is basically what you see here. You know, a ridiculous, out of control breakout, just off the wall, and then a retrace, and this is the bubble bursting, and you know, we'll do it all over again. You know, that's just basically how it goes. Don't get me wrong, there are many of stocks, many of commodities that I've seen that bubble cycle and never recover. You know, but that's neither here nor there. Sentiment. You know, let's see. Oh, one thing I want to do, I did start out this video, you know, saying that I do check in on a lot of good technical analysts, and I actually want to give them a shout out. One of the guys I have the most respect for. This guy is an absolute genius. I don't care what anybody says. You cannot change my mind. His name is Tyler Jenks, and he created an idea called hyperwave theory, which is basically, it's a bubble cycle, but he's taken it and he's broken it down into, I believe it's 7 phases. Just, I mean, Jesus, the guy in my book he's discovered gold. But another guy is Tone Vays. I like Tone a lot. I watch a lot of his videos. You know, he's just a Bitcoin evangelist, and I have a lot of respect for him. Another couple of guys I watch is Trade Devils. They're phenomenal. The guys Sam and Quan. You know, Sam is fantastic with Elliott wave theory. Just, you know, completely awesome. I love his videos. I love how he goes through things and explains to you his thought process. That's just great content in my book. His partner Quan is another mad scientist. He likes to talk about Fibonacci time and, you know, all that kind of stuff. Let's see. Another shout out I'd like to give is Josh Wally, who I bring up especially because we're talking about trend lines. And in my book, he's a mad scientist when it comes to trend lines. You know, I just been kind of laying in the weeds. Just, you know, making these videos takes a lot of time. It's a lot of energy, and you know, I do it mainly for fun. Yeah, I mean, that's about it for this. I'd also like to mention my partner Rado, he is fantastic with Elliott Wave Theory. We have a channel, we make calls, we have a paid channel, a free channel on Telegram. I want to get him on one of these. I want to start getting him on these videos. The only thing with Rado is he's from Serbia, and English is not his first language, and I think he's a little self-conscious about that. But you know, I was explaining to him today. I'm like, listen, your analysis is phenomenal, and nobody cares how you speak English. So I'd like to get him on here. He's also a coder, and he's created his own Bollinger Bands, his own custom RSI, which is bordering on godly. So there's a lot of things that we're going to be doing here. I'm going to start taking requests for altcoins, etc. At some point, with some type of donation or something. I mean, this stuff takes time and a lot of effort, a lot of energy, and we need to be compensated for our time. There's plenty of content we do for free. We try to help people out and stuff like that. But this takes away time from our trading and our money making. So yeah, that's about it for Bitcoin. You could see it's dropping 408. Just let's just check in again here. I'll go over the shorts and longs. I actually chart shorts and longs. The longs are it's no good. We were here. All right. This is kind of a chart I had playing around with somebody, but this is the daily 410. Yeah, we're kind of coming down a little bit. Like I said, I expect a move down in this area. Just kind of waiting it out. But yeah, guys, if you like the video, again, like, subscribe. Any altcoins you might want to see or anything like that, give me some ideas and we'll try to get on the charts. But thank you guys for watching, and I hope you enjoyed the content here. And we'll check you guys next time. Thanks for watching. Bye.